This is Cashflow Ninja, episode 143 with Bryan Birsic.
Welcome to the Cashflow Ninja, the podcast empowering and inspiring people to discover how to generate their own income and manage, grow, and protect their own wealth in the new economy. Now, here is your host, MC Laubscher.
Hello everyone, MC Laubscher here, and welcome to another episode of the Cashflow Ninja. I have a great show for you today, and in today's show we're going to look at how to create cash flow income streams from solar investments. My guest today is Bryan Birsic. Bryan is the president and CEO and leads the strategy, finance, hiring, team management, and fundraising for Wunder Capital. Bryan brings an extensive finance and capital raising expertise to Wunder Capital, from private equity investing at Bain Company to financing online commercial lending companies at Village Ventures. Notably, Bryan's firm led early investments into commercial lending market leader OnDeck Capital. Along with his finance background, Bryan has built and led several companies that bring software approaches to new markets, most notably and recently SimpleReach, where Bryan was president and which he has raised more than $15 million. Bryan attended Williams College and moved with his family to Boulder from New York City several years ago. Please share your feedback and thoughts with me on today's interview. You can let me know your thoughts on Twitter by tweeting me at MC Laubscher or by email at info@cashflowninja.com. And please remember to join our mailing list by signing up at cashflowninja.com or texting Cashflow Ninja, one word, all capitalized, to 44222. That's 2 4s and 3 2s. You can support the show by becoming a patron on Patreon for $10 a month. And when you become a patron, you get access to our private Facebook page and a Cashflow Ninja t-shirt. You can become a patron by visiting cashflowninja.com/support. Have you read Rich Dad Poor Dad? Are you interested in real estate investing and don't know where to start or how to get the results you want? For valuable information to get you started, visit JoinOps Properties at joinopsproperties.com. If you're not earning at least 8% on your cash, you do not want to miss the private lending presentation for non-accredited investors done by Jimmy Freeland and Bob Scott. Discover how to create an income stream from real estate without the management headaches. You can access the presentation at cashflowninja.com/private lending. Spartan Invest have a proven plan and system helping investors creating passive income and wealth through turnkey real estate ownership in the exciting market of Birmingham, Alabama. Find out why Birmingham has got it going on, why it's a steal right now, why it's a millennial hangout, a hidden gem, and one of the most exciting investment opportunities you have never heard of. You can download your free report, 5 Big Reasons to Invest in the Magical City of Birmingham, Alabama, at cashflowninja.com/Spartan. I've spoken about the most powerful system on the planet on the show, the banking system, and my firm Valhalla Wealth Financial helps people reclaim the banking function within their own lives through leveraging the premium tools and strategies of the wealthy. If you're interested in reclaiming the banking function within your own life and the infinite banking concept, you can access a free webinar presentation at cashflowninja.com/be-the-bank. Bryan, welcome to the show.
Thank you so much. Great to be here.
Can you please share a little bit about your background and your journey with my listeners?
Absolutely. I'm a public school kid from Pittsburgh who decided to go to a little liberal arts school in New England called Williams College to study politics and economics, and didn't quite know what I wanted to do, but wanted to live in New York City. So joined a consulting firm called Bain Company and learned a lot there, but frankly, didn't feel as though I was pushing the ball forward on the things I cared about. Obviously, in client services, you're kind of assigned to the case you're assigned to, right? And that became more and more important to me. And I really got excited about what was happening with technology startups. This was in 2007, and I was in New York City, and New York was really having a bit of a renaissance, or maybe even a birth for the first time as a startup center, particularly around some things like the financial industry and retail that we're seeing a lot of startups, and New York has a lot of depth in. And I just saw, as an economics major, what really excited me about it was kind of the dynamism and the meritocracy involved in like the operation of the market. And if you do good things and create a lot of value, you can continue doing more of it and scale. And if I looked at some of the companies that had huge impact, tech startups seemed to be amongst those groups and people that were really changing the world. And so I jumped from this big company consulting work to a venture capital firm that was backing early stage companies. So generally, 5 to 10 employees, kind of the first round of real institutional capital. So really early stage stuff around software, particularly software in the financial industry. Because again, I was in New York, and that's obviously a big industry there. So naturally, the software community gravitates that way in New York. And it was through that process that I first got familiar through an investment into a company called OnDeck Capital at first, and then getting into the market a little bit more. This marketplace lending concept that has become popular since Lending Club and Prosper came onto the scene to do it for consumers in 2006 and 2007. And the idea is basically, you have some group of people that want to borrow money and are willing to pay, some interest rate. And there are people who have capital and are interested in making that return. And you're using technology to kind of disintermediate the traditional financing industry and connect those two parties in a tech-enabled and really efficient way. Yourself making money by taking a small piece through a loan origination fee and a loan servicing fee that are kind of a standard part of any financing. So we're already kind of built into the market. And that is, was kind of my education that led up to Wunder. That's really what we do at Wunder. We think of ourselves as connecting businesses that are interested in building solar at their facilities and are willing to, pay an interest rate that's oftentimes overwhelmed by their cost savings. So it's net positive for them. With, anyone on the capital market side, individuals, family offices, trusts, bigger institutions that wants to make that return, right, and likes that risk profile. So that's a pretty quick sketch. There are some other details if we wanted to go into it, but that was what brought me to Wunder and why we got this thing started in 2013.
Brian, what is your philosophical approach to creating and building wealth and investments?
Yeah. I philosophically, I really like markets that the pie is growing fast enough that you care as much about growing the pie as your share, and the kind of competitive dynamics that tends to create. There's a great blog post by Ben Horowitz, who was a great entrepreneur, now one of the leading venture capitalists, where he talks about wartime CEOs and peacetime CEOs, and really wartime and peacetime markets. And this is an allusion to Godfather. But the wartime market is a stagnant or relatively slow-growing mature industry where your dollar has to come from someone else losing it. If you close a sale, you're probably taking that sale from one of your competitors. And a peacetime market is one in which it tends to be new, it tends to be growing. These markets in the last several years have often been tech-enabled, where you're really focused on growing the pie, and it's more about growing this market, bringing it to more consumers or more businesses, depending on what you're doing. But it's an expansion phase. And so philosophically, I just have found that I really enjoy and get excited by and am motivated by that. Being in spaces that are quick growing and therefore have this, we can kind of work together to grow the pie, and we're incrementally adding to the market, not hard elbows competition. The other thing that I would say is that I think there are ways to make money where you are capturing as much, or in some cases more, value than you create. And, I think when I look at all the great businesses, and particularly the great businesses, not just financially, but the impact they've had, it's folks who create lots of value that they don't capture. They capture a portion of it, but they create a lot of value for other people and other actors or their customers. So, You're bringing in leads someone used to pay $5 for, and you build a great business bringing them in for $2 instead of pricing them at $4.95 and, trying to sell hard against that and capture the whole excess profit, excess value that you're really trying to create in these new markets. So I also like philosophically the idea of let's figure out how to create value. And then in almost all cases, if you create a lot of value, you're going to capture a piece of it. Versus I think sometimes in the financial industry, you can have a more transactional, I'm going to win this negotiation because we can't all win sort of dynamic. And we like to stay away from that thinking at Wunder.
No, I love that because that's the worldview of abundance. So growing the pie together and trying to provide as much value on all areas and all sides of the coin. Let's jump into the solar industry. Can you give us a little bit of a primer? Because there might be a lot of my listeners that is not familiar with the industry itself, and share a little bit, just an overview of the industry and what's going on and what is new and exciting.
Yeah, absolutely. In terms of what's going on and what's exciting, it's a boring story actually about a market that has decreased in cost by 10%. The output, the actual solar, equipment and the installation of them has decreased by 10% every year since 1975. Now, from about 1975 until, 2005 to 2010, let's say, and particularly more recently, that was really an exercise in going from wildly too expensive to less wildly too expensive. It was still far away from being cost competitive with, hydrocarbon-based power, basically. And there were some people who did it for green reasons, and God bless them because they got the industry off the ground. But there was a really interesting tipping point that is happening in different places based on the price of power, which varies quite a bit. But these markets where for forever and ever, right, for decades, solar was more expensive. And so the only people that were willing to go solar is let's call it 5% of the market that was willing to pay more for power. Because of the impact, right? Now, what you've seen in the last, decade, let's say roughly, is more and more markets where you can walk in with a purely economic cost-saving package. Solar goes from being the 5% of the market that's willing to pay more to the 99% of the market that wants to save money on their power bill. And for this reason, one of the things that we love the most at Wunder is when a business is going solar who doesn't actually care at all about the environmental impact. We do at the company, but it's an indication of the maturity of the industry when someone can look at it from a pure dollars and cents perspective and say, this makes sense for my business in the case of what we do, or this makes sense for my home. And so that is the most exciting thing in solar. And, the reaction to this last couple years where you could pitch cost savings instead of just, doing good, is this market has had a, just under 60% annual growth rate. In terms of capacity installed, over the last 2 years, solar has been the biggest new capacity generation, so new generating capacity for the electricity grid. The contributor of the last 2 years in the U.S. has been solar, more than natural gas in 2016 per government data, despite this fracking craze we're hearing about. So I think that's an undertold story, that flip from doing good to this stuff just really makes economic sense. And, for better or worse, that means a much, much bigger market. And so that is the dynamic that is most exciting. That's the headline. A little bit of, to go just one level deeper, there is this bifurcation in solar that I think is maybe glossed over too much sometimes, but it's an important distinction. There are these really big solar power plants in the desert and similar sorts of places that utilities are basically using as a replacement for, in addition to big hydrocarbon plants. And so they are out pitching against the price of natural gas and coal in some cases, but they're pitching against the rest of the energy market so that the utilities will use it to then get to the rest of the grid. That looks a lot structurally like a coal plant. It just happens to be solar. Not happens to be, it's really important that it's solar, but structurally very similar. Centralized locations, huge source, compete with the other energy sources directly. What solar, though, does that no other energy source has ever done is it also contributes at the point of consumption, at your home, at your business. You can generate power with solar. And that's never been done before. There's never been a cost-effective way to create, coal, electricity generation, or natural. It's funny to even think about, right? What that would look like on an individual level. You have to go back to, people getting coal and bringing it back to their homes, right? In 18th century England. But that is a real shift that I think is not often perceived, that really we're going from potentially a centralized generation that spreads out to the rest of the network, which is what always the power grid has been, to generation, and now with electric vehicles, storage that lives on the edge of the grid. That there's, a million different points across the California grid that are both producing and consuming power. It's just a fundamentally different way to think about power generation and management than this top-down centralized dynamic. And so as we start to see higher and higher penetration, I think the other thing to watch in solar, and this is looking forward perhaps a few years, not back, the other thing to watch is the way in which having generation and now storage with EVs, as they get more popular, at the edge of the grid, at the consumptive point, not at these centralized nodes, is going to be a real sea shift in the electricity generation space, the energy space, 6% of GDP in the US, big market. And I think that's a bit of an undertold story.
Now let's talk about Wunder a little bit and what value Wunder provides to the marketplace.
Absolutely. As I mentioned, the lesson of these marketplace lenders was that you could use technology to connect parties really efficiently, connect people who wanted to borrow and people who wanted to provide capital in really efficient ways. And one of the really interesting things about that is it kind of unlocks markets that heretofore were either poorly serviced or unserviced by like traditional financing players. And one of the biggest and best examples of that is it turns out that for business entities, the FICO equivalent, right, the credit score that they get from a Hoover's or an S&P or one of these folks that gives you a AA rating and you can take out and raise capital against. Unlike FICO, which covers about 95% of U.S. consumers, so it's very, very good coverage. Those commercial credit rating agencies only cover about 15 to 20% of U.S. businesses. And it's a pretty easy reason. Businesses are complex to analyze, and there's a fixed cost associated with doing that work and putting a grade on it. And most businesses don't get enough credit reports pulled to justify that initial upfront cost. And so in commercial lending and commercial financing more broadly, one of the innovations that technology brought was doing all of that work efficiently enough that you could then focus on small and medium-sized business that did not have a credit score. You could go do the work yourselves for a $100,000 loan or a $500,000 loan because you were doing that with, pulling data automatically, right? Scraping data from sources, filtering, projects cleverly to avoid wasting time on bad ones, automating a lot of the deal execution and contracting, and then we've automated pretty much all of the loan servicing. Basically just allows you to do smaller loans than a traditional provider could. And what that's meant for us is we really are the only provider we're aware of solar financing that wants to do $250,000 to $1 million solar financings, commercial solar financing. So if you're a business, in other words, that wants to build a $500,000 solar project on your roof, and you're working with a partner to build it, right? There's someone who's sold you on this idea and will build the system itself. We are the only entity we're aware of that wants to take those projects because we've used technology in such a way that we can make money on them. And frankly, the traditional financing industry can't. So that is our niche. We really are trying to enable this, commercial solar market right now in the US, but, hopefully across the world soon, by being really efficient in our process and therefore basically being able to make money on deals that are too small and unrated for others too. So that's Wunder in a nutshell.
So it isn't huge solar companies that are borrowing money from you guys, but all of the smaller companies that are getting involved in solar.
Yeah, that's correct. So our funds are for, any creditworthy business. And, it's not generally the folks building, even these sizes that other folks, it's too small for them to service. Even a $250,000 solar project is actually quite large. So to give you a sense of scale and your listeners a sense of scale, a pretty large home would need perhaps a $20,000 or $25,000 solar system. So you're talking about something that's 10 times the consumptive need of a good-sized, suburban big home. So these tend not to be like restaurants, barbershops, kind of that kind of small business. Tends to be more, 3, 4, 5-story office buildings, really big box retailers or multi-tenant retail, hospitals, schools, churches, these sorts of things. So yeah, it's anyone who wants to put up solar, not the solar companies themselves.
Very interesting. So let's walk us through the whole process of how this works from the company that is looking to get involved in solar and is looking at financing to eventually where listeners that are interested in becoming investors in this get involved.
Absolutely. So yeah, I'll just take a project chronologically, and then when we make the offer, I'll describe kind of where that offer is coming from for the investor side. So you're a business, you're in one of the 27 states where we have more than 100 partners. And one of our partners basically, somehow convinces you should hear more about solar. You like what you hear, and you move to a quote. That's the point actually where you're going to get introduced to Wunder. And so think of it perhaps as the car dealership relationship with a car financing option. The dealership's getting you down the sales funnel, convincing you which features you want, right? And then when you get to quote, they're going to help you understand if you'd like a financing offer, what that monthly payment's going to be. Playing that financing role in that conversation. So you brought in, you've come to someone said, okay, it's a $500,000 system we're recommending. Would you like to hear what a financing offer would look like from our partner, OnDeck Capital? And again, they don't have someone else to send these deals to, and it helps them in the sales process to have a financing offer, not just, hey, you have to figure out how to pay us $500,000, right? That's a good thing for their process and their close rate. And so because we're the only people operating in this space, we've been able to partner with a lot of folks around the country to be their financing offer in this, again, kind of $250,000 sweet spot that we focus on. At that point, if they say yes, that sounds good, I'd like to see a quote from Wunder. Two things are going to happen. The installer partner is going to send the information that they have on the project and the system. So they're going to upload that into a digital portal we have, goes right into our database and starts pulling other data. I'll get into that in a second. But also the business themselves is going to come in and go through an application process. Again, online portal we've built feeds into our database. Once we have that key information, we actually can use some key data points like the address, right? For example, we'll go pull 50 data points about real estate based on one address. We have the EIN of the company. We can go pull, any kind of liens or legal action that might have happened in the last 5 years, right? So we can use some of this core data to go gather automatically a lot of the things that you want to make sure is in line before you give someone a multi-$100,000 loan. The next part of the process is really once that data is gathered and none of the flags have been tripped, like, hey, this is a red line. These folks went bankrupt in the last 5 years, filter them out. So these are good projects. We actually go through a relatively manual underwriting process. This is the one part of our process that feels a little more traditional or would be more familiar to a traditional lender. And we think that's appropriate. These are large loans. They're complex. And we think human beings are still best anyway today at evaluating that variety of data. If they say this looks great, we make an offer. We guarantee an offer back, by the way, in 5 business days. That's roughly 10 times faster than you'll see from a bank or the SBA or a lot of the other options that a business might have. So that's also a help and an advantage of using technology. But we will get them a preliminary offer, depending on a few things and a few signatures. But we will be making a financing offer to them upon the completion of their solar system. So they basically have a long-term takeout term financing, the same way you might line up a mortgage. And they're set up to, pay us back over time. Now, in terms of who's actually doing that, making that financing offer, who is the actual counterparty and where's that money coming from? Right now that we've said this is a good project, this is a good opportunity, using our framework. That money is coming from, we now have 2 funds, and they're basically, they're LLCs, they're little, entities of their own, Wunder Capital 1 and Wunder Capital 3. And they sell notes to investors that have projected returns, projected yields. Our most recent fund has a projected yield of 8.5%. over a 7-year term. And we will then take that capital and those obligations to investors and use the capital to make loans that pay the amounts that those notes have been made against, or in some cases slightly more. So if we have a projected 8.5% return over 7 years, we'll always do a 7-year loan out of that to match up the terms. Of course, we might do an 8.75% to add a little bit of cushion. But basically we're lending at the rate that we are projecting to investors. So that entity, once it has sold notes to investors, has capital in its entity, and that capital sits there until an approved project is ready to go. We aim for 30 days on that. So we have a kind of a 30-day kind of settling period where we line up a project effectively for your capital to go into. But once you've invested, one of the things that we really like about the structure, we find investors like, is even though your capital was used to build a specific project, you were diversified by all the projects in the portfolio. So we have already more than 40 projects that are executed or contracted in the latest fund, the term fund with the projected 8.5% annual yield. And so you kind of have immediate diversification in a way that, by buying into this entity that's then doing lots of lending and has lots of kind of cash flow streams to service your liability as an investor, your yield, your projected yield. You have I think a more attractive product for a lot of folks who want to be diversified and like that appeal relative to, for example, in a slightly different vertical, but folks are probably familiar with, there are a lot of real estate sites where you can go in and invest, crowd finance one property, one big commercial property. But of course, the risk is, very tightly coupled to that one property. So that's the structure. The money comes out of the fund, makes the loan, and then we're, pulling down monthly payments from the borrower per their, in the example I gave, 8.75% loan. And then those proceeds are immediately used to pay the investors monthly, deposit right into their bank account. And then on an ongoing basis, that's the relationship. We're working really hard to make sure that is the relationship all the way through the 7 years and every one of our loans. Inevitably, we will experience a default at some point, right? We'll make a mistake at some point, or some risk will be good risk, but a company will go the wrong direction. And the other thing we're doing, basically, just to flesh it out a little bit more, is we're actually operating to basically act in our investors' interest, exercise their rights in the case of a default. And what that means in the case of solar is taking ownership of the solar system and actually finding a new buyer for the electricity. So that is the one other kind of unique role we have. It's not just traditional loan servicing. In the case of a default, we've got basically kind of a custom solar workout group and an understanding of what you would do with that asset. We would do that at no cost for our investors to make sure that they got as much back as they could. So that's it. That's a project soup to nuts, and how we play.
Thank you for sharing that. And I appreciate that you shared the risk management side of it too, because that was going to be my next question. Is obviously we're talking about the upside, but protecting the downside and risk management strategies are cardinal. So I appreciate you sharing that with us. You're listening to Bryan Birsic on the Cashflow Ninja podcast. We will be right back after a word from our sponsor.
Are you having a hard time finding great investment properties? Unfortunately, the best deals are rarely found locally. Successful investing begins with the right properties in the right markets. Norada Real Estate provides everything you need to invest in the best deals across the U.S. Our simple, proven system will help you create real wealth and passive monthly cash flow. Get your free copy of the ultimate guide to passive real estate investing at noradarealestate.com/guide. That's NORADA realestate.com/guide.
You're listening to Bryan Birsic on the Cashflow Ninja podcast, and now back to our interview. Now, you alluded to some of your funds, and you mentioned the one is a term and the one is an income. So, but there are, as you mentioned, the returns are paid into investors' accounts on a monthly basis. So is one of these funds set up for a cash flow and monthly income stream for potential investors?
Yeah, absolutely. So our term fund, the one I just mentioned, with the 8.5% projected return over 7 years, that is fully amortized. So that is very much set up for someone who's looking for what is projected to be a very steady cash flow. And so you are getting obviously a portion of principal. You can look up any amortization, schedule and see exactly what, $1,000 into an 8.5/7 schedule looks like and how principal and interest get paid back. But yes, in short, what we find is that a lot of what we are, either replacing in someone's portfolio or maybe adding to the portfolio is a fixed income sort or a bond sort of appeal or dynamic, let's say.
So how do investors get started with you guys? They go on. Is there a minimum to invest? Is it only for certain investors? What is kind of your investor profile that you're looking to conduct business with?
Yeah, absolutely. On the investor front, we use as much technology as we do on the borrower side. We're fundamentally a technology company more than anything else, although we're certainly also a finance company and a solar company. The vast majority of our investment comes in through our website, our portal, where an investor can really go all the way through the process. We're always happy to connect and get on the phone, and there are opportunities to book meetings with our team on the site. But there are a lot of folks who just go all the way through the process and electronic signature, electronic verification, all of those sorts of good things that you need to do to make an investment. We're doing on our portal. Because we are quite efficient with bringing folks through that, we have a $1,000 investment minimum. For the kind of custom private debt, actively placed work that we're doing, that's about as low as we've seen. We're very proud to be able to offer that investment size. We do get limited though by frankly, the way the SEC is interpreting the Jobs Act right now in the United States. And right now, if you want to sell the kind of securities that we're selling, you are limited to accredited investors. There is a new structure since we started and since we launched these funds that maybe will give us an opportunity to raise a fund for all investors. It is absolutely our goal. The idea that someone would want to build more solar and facilitate that with their investment and not be able to, is as upsetting to us as we suspect it is for the investors who can't. So we're working really hard to crack that nut. But, the well settled legal territory in the U.S., unfortunately for these sort of private debt security placements, they require accreditation. So we do that on the site as well. That's something we do electronically, and you can submit electronically. But that's the high level structure. And then I think you're alluding to kind of the profile a little bit. What we find that Wunder seems to really be hitting the mark on for a group of people is an investment that allows them to feel comfortable with the pure economics, the pure risk return. And kind of interestingly enough, this kind of correlates with what I was discussing with the solar market broadly. But, solar's gotten to the point where I think that the investment stands on its own 2 feet. If you don't care at all about the environment, you think climate change is a fraud, I think it stands on its own 2 feet. I don't think you need the impact to get you there if you don't want it. But with us, it can be yes, it is, what we're aiming for, a market return, a better than market return, but also an and, not an or, right? It's not impact or market returns or something compelling that excites me as an investor. It's and I think that is, that's a trend we see with millennials who want to have purposeful work, right? They want to combine what they care about in their work. And I think you see people who want to combine a really strong financial mind and facility and maybe skepticism, right? Appropriate. And a good thing to have in investing with being able to do something good. And I feel like that Venn diagram overlap describes, the motivations and kind of the how they got to Wunder instead of the many other ways you can do good with your money. I think that was why those people found us in a lot of cases.
No, and I really appreciate that. Doing well while doing good for the community. Exactly. and so forth. Now, Brian, one habit I've observed from wealthy and successful people is that they're always studying new subjects and learning new skill sets. What are you currently studying, and what skill sets are you currently learning?
Yes. Wunder keeps me relatively busy, but fortunately part of, I think being successful in leading Wunder is understanding human psychology. And so I've spent a lot of time in the last year or two reading For example, things like Daniel Kahneman's Thinking Fast and Slow, the bestseller from several years ago that is 1,000 pages, and I'm fairly certain no one makes it to the last page of, to things like the work summarized by Daniel Pink's book Drive around what motivates a person in work, what gratifies them, what are the relationships between what is traditionally thought of as happiness and purpose and autonomy and mastery, some of the things he talks about. So a lot of just trying to understand a layer or two below, or look at some of the latest research around how as a group at Wunder we can make sure we're supporting each other, doing the best work we can, and building a team that's going to grow really successfully. So that's been my kind of obsession over the last year or so. And then I always have a good sci-fi book on my Kindle as well. It's always more fun if you're a little drained from the serious psychology stuff. It's a great way to go. But I do think as a startup and as someone trying to innovate, it's really helpful to live in the minds of people that were making things up a lot and kind of in technology-enabled ways. I think that's always a good brain stretching exercise. So that's not so much lately, but just something I found really helpful. And I think you think of less than the more practical stuff.
A core message in our show is to leave our families, communities, and the world better than we found it by passing down a mindset, values, and principles to future generations, not just money. So if you were only allowed to pass on 3 principles to the next generation for them to build wealth and achieve happiness and success, what would they be?
Yeah, I mean, I think one of them would be that kind of the tyranny of the or, the either or, and the possibilities of the and I mean that in kind of a life fulfillment way, and what kind of impact can you have, and hoping that they find a way to be true to the things that they care about, live their values, not just on the weekends, not volunteering at night, but through the things that they spend meaningful. The thrust of our lives oftentimes is the time we spend working, and so that can manifest in ways that are addressing big challenges like climate change. That can be being passionate about running a reading program, right? And those things are, to me, equally valuable and gratifying. So it's different for everyone, but I think, that would be one. And I think a lot of people get caught up in that, at least in today's society. 2, I think the ways in which we can grow and change, I think are vastly underestimated. I think if you look at, not to use a sports analogy, because it's a little cliche, but Tom Brady didn't start his senior year at Michigan, and he's arguably the greatest quarterback ever. That is not because he was overlooked for 3 years at Michigan. It's because he's worked outrageously hard to improve himself every single year, and the delta between a 5% annual improvement rate of yourself and a 20% annual improvement rate of yourself when you compound it over 10 or 15 or 20 years is just outrageous. And I think that when you're younger in particular, it seemed to me, at least growing up, that it was this person's smart or this person's talented. And what I've learned more and more of over time is it tends to be actually that person's incredibly hardworking. We all start from a point, but it's mainly about the slope of that curve. And so that can be self-improvement, that can be athletics, but I think the power of compounding returns, perhaps, as it relates to yourself and your ability to change and grow, I think is pretty remarkable. And this gets a little bit, by the way, if we're looking at things to read, Anti-Fragile by Nassim Taleb is something that one of the framework books, which is to say it's one of the frameworks that my brain kind of fits things into and problem solves with, and that's probably the most the thing that I'm most grateful for is when people give me those new frameworks. It's a really powerful thing. But Anti-Fragile basically argues that stressors and difficulty, this is effectively Nietzsche's philosophy actually, but Taleb makes it mathematical, but that as you stress things, they grow stronger. We know this about like attention spans. You have a certain amount of attention every day, but if you stretch it the right ways, you can grow it over time. It's true of our muscles, of course, right? We rip them down to build them back up. I think that dynamic operates in a lot more places than people appreciate. And if you use that to grow quickly or just grow steadily at a double the rate of other people, that tends to be a really consistent characteristic of people that I've seen that get to levels of 10x value and are amazing at things. And it's not that they started there. It's that they worked really hard for a really long time and optimize the growth rate by feedback loops and by all the other ways that you can think about growing. So that's 2. Oh man, I don't know if I have a third. That's most of my life philosophy right there in a nutshell. I suppose maybe the last one would be, since we're talking about finances and not leaving money, kind of the diminishing marginal returns to money as it relates to satisfaction and happiness. That once you get to some relatively comfortable level, that satisfaction is about a lot more. And that's in the context of spending the whole time talking about investment. That's probably worth calling out.
No, fantastic. And thank you so much for sharing that. Brian, how can my audience and listeners learn more about you, your company, and keep informed of all of the projects that you're involved with?
Yeah, we're at wondercapital.com. So I'd love to have any folks come and look at the information we have, videos and FAQs and lots of good stuff, hopefully, to understand us. If you're curious and following a slightly more real-time stream and some more random thoughts, I'm pretty active on Twitter at Birsic, Birsic, and we're on at Wunder Capital, and we retweet each other a lot. So probably get a flavor of both following either. And otherwise, as I said, there's lots of contact information on the site. You can book a time to talk to our team. There's lots of ways to reach out if you go to wondercapital.com.
Fantastic. Well, Brian, thank you so much for coming on the show and sharing your journey and your knowledge and providing so much value for my listeners.
I really appreciate it. Thanks so much.
This is MC Laubscher, the host of the Cashflow Ninja podcast. As you may know, I'm also the president and chief wealth strategist of Valhalla Wealth Financial. We help individuals, families, small businesses, entrepreneurs, and professionals build their wealth outside of Wall Street and help investors maximize the use of every dollar in their personal economy and boost their investment gains. We do this by combining the capital and investments with the financial vehicle of the wealthy according to the infinite banking concept. If you're interested to learn more about privatized banking and the infinite banking concept, you can access an exclusive webinar at cashflowninja.com/be-the-bank. Thank you for joining my guest, Brian Birsic, and myself on the Cashflow Ninja today. If you like what you hear and appreciate what we're trying to build here at the Cashflow Ninja, please subscribe, rate, and review our show on iTunes and share our show with family, friends, and your network. I'm always trying to learn and improve in every area of my life, so if there's any way that I can provide more value to you and serve you better, please reach out to me at info@cashflowninja.com. If you're not a subscriber to the Cashflow Ninja Gashku newsletter, you can sign up for our newsletter at cashflowninja.com or text Cashflow Ninja to 44222. That's 2 4s and 3 2s. You can also support the show by becoming a patron on Patreon for $10 a month. When you become a patron for 12 months, you get access to our private Facebook page and a Cashflow Ninja t-shirt. Jimmy Freeland and Bob Scott have been in your shoes and have used real estate investing to become financially free. They've designed a system to take any beginner to an experienced deal-making investor in the least amount of time. They offer opportunities from basic education, coaching, bridge loan investing to turnkey investments in the cash-flowing market of St. Louis, Missouri. For more information, please visit joinupsproperties.com or call Jimmy and Bob at 314-799-2247. If you're not earning at least 8% on your cash, you do not want to miss the private lending presentation for non-accredited investors done by Jimmy Freeland and Bob Scott. Discover how to create an income stream from real estate without the management headaches. You can access the presentation at cashflowninja.com/private lending. Creating passive income for you and your family is easier than you think. All you need are 3 things: the right plan, the right product, and the right turnkey provider. As an investor, you want a safe, profitable, and convenient way to invest your capital without being at the mercy of stock market fluctuation. Investing in real estate in a turnkey way that provides monthly passive income with very low risk is exactly what Spartan Invest provides for their clients. Their mission is to make investing in real estate easy for the busy professional. Spartan Invest help investors create passive income and wealth through turnkey ownership in Birmingham, Alabama. You can download your free report, 5 Big Reasons to Invest in the Magical City of Birmingham, Alabama at cashflowninja.com/Spartan. The wealthiest families on the planet know how to capture their wealth and then leveraging their wealth through their own banking system. If you're interested in privatized banking and the infinite banking concept and learning the premier strategies of the wealthiest individuals and families on the planet, you can access your free webinar at cashflowninja.com/be-the-bank. That's our show for today, everyone. Until next time, live a life of passion and purpose on your terms.
You have been listening to the Cashflow Ninja with your host, MC Laubscher, the podcast empowering and inspiring people to discover how to generate their own income and manage, grow, and protect their own wealth in the new economy. Today's show notes and resources are available on our website, cashflowninja.com. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objective, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.